Hi, I'm Ross Healy, Chairman of Strategic Analysis Corporation, and welcome to FANG Friday -1. What we are going to do today is look at the FANG stocks to see what the technical and fundamental condition is of the 6 of them, including Apple and Nvidia. So, let's take a look. Okay, let's start with Amazon, and the stock, after a bit of a faux breakdown here at the very tail end of that setback in December, has bounced back smartly and has been sitting nicely on its HB3 and indeed as rising towards its HB4. Currently, it's in between, and that's at 18 times its book value. This would be 20, and this would be 16. So it's about halfway in between the two. Looking at Nvidia, here's a stock which we really liked off its lows, back off its bubble price at 7.5 times book value. And it has been rising nicely ever since. I think that it still wants to go to that 203 level, that's the HB2, or about 12 times book value. It looks like it's going to get there nicely. Our third stock is Apple, and Apple had a nice bounce right off its mid-super growth price. That's 5.5 times book value. And that, I remind people who have been tuning in for some time, was the peak of the stock for the last 10 years. And now, for the moment at least, it turns out to be a good support level. I don't think that it's going to get above its bubble price, which is 7.5 times book value. But we will wait and see, because the stock is heading up there very nicely. So there are 3 stocks that we think are at least holds, if not potentially buy holds. Now we come to the more problematic of the companies, and the first one we start off with is Netflix, and it has been banging its head on the ceiling at the HB5 level. That's 24 times its book value. Well, of course, we know what's been going on there. First of all, Disney has come tromping into its market with a discount service. And secondly, from the numbers of the last quarter, its subscriber base is slowing down. So on both counts, and the fact that the stock is extremely expensive and is trading, by the way, up about 60 times book value, or 60 times its price earnings ratio, is a very expensive stock with potentially fading fundamentals. I would be very careful of Netflix. Our 5th stock is Alphabet, and you can see here that after the recovery from the sell-off in December, the stock roared right back up against technical resistance, setback, and is trying again. I don't know whether it will be able to break through. If you look at the fair market value potential, it's minus 25%, so the stock is a bit on the overvalued side. Currently, by the way, it's trading just under 4.5 times book value. Finally, we'll take a look at Facebook. Here's a company that certainly is under a fair cloud. I think it's fair to say. The stock, compared to the other FANG stocks, by and large, is actually fairly cheap. It's trading a little over 5 times its book value there. But it's got this nice overhead resistance at 5.5 times book, which currently is $185. The fair market value is about 20% below where the stock is trading now. Given the fact that it is running into fair overhead resistance, I would have to say, before I would buy the stock, I would need to see this breaking out, because otherwise This may be the third of the 6 FANGs that has run into technical resistance which it may not be able to overcome. Okay, well, what have we learned today? We have 3 of the FANG stocks which are still in a rising mode and would remain at least holds, if not buy holds. We also have 3 FANG stocks which are running into heavy overhead resistance and which we would be very careful about owning at the present time. This has been Ross Healy, Chairman of Strategic Analysis Corporation, reminding you that nothing, including investing, is difficult if you have the right